Hello guys, welcome back to Culture Trading Hub. Now I'm excited to introduce to you rise and fall manually. Now this is episode 1 and we were doing it on a live session whereby we had a lesson where a meeting, a Google Meet lesson, and we had students joining. So in this case, you need to follow the lesson to the end so that you can understand. And this is basically episode 1, the first ever episode on rise and fall. So it is very important on basically setting the basis for anything we will be doing on the rise and fall market. So make sure to watch to the end. And before we even proceed, make sure you like this video, comment, subscribe, and even share with some of your friends. So guys, this is interesting, and I'm super excited to introduce to you the first ever episode on rise and fall. So stay tuned and let us get right into it. I believe we are quite a good number. I have like 30 students in here, so that's not a bad number. I think we can work with that. This is trading view. This mostly we use it when we are trading forex, but no need to worry, guys. Should not panic, because I'm here to hold your hand today and instill some skill in you. So now we have said that we are discussing what we call we are discussing rise and fall, and in this case, if you are trading rise and fall, usijaribu kutrade rise and fall na bot. That is the first mistake people do. Ati sijui ukiangalia candlestick ina rise at you guys, this TikTok is misreading you very badly, and you might end up blowing your account simply because of some simple instruction. Nikikwambia ufai kutumia bot ukitrade rise and fall, ufai kutumia bot ukitrade rise and fall. That is the first disclaimer. Actually, we should put it here. So you can say that you should always trade manually if it's rise and fall. That you are trading. That is something that you should note. So now I want us today to come up with a simple strategy that will help us trade rise and fall manually. So what we are going to do, number one, you need to access the chart. You need to access what we call the charts. So how do you access the charts? So step number one is for you to understand how to access the charts. So these charts, basically where we have the candlesticks. I will show you what candlesticks are. So if you come here, I don't know if I have any tab open. Okay, this is my pocket option. For your information, pocket option is better than DERIV. Nambali sana. It is the best options trading platform we have in the world right now. So plus pocket option, basically you don't experience manipulation like the way you experience in DERIV. So kitu ya kwanza, unaingia kwa browser yako. You get into your browser, and then what you're going to do is that you're going to search trading view. Uandike exactly how I'm writing it. So I don't know if I'm going to zoom in here. God damn. So I don't know if it is zooming in. I will zoom in or what. So you search trading view, implementation. For DERIV, and then you hit enter. You wait for the results. So the link I want you to work with is this one here, imeandikwa DERIV, and then slightly on the link itself it's chat.deriv.com. so inasoma advanced trading charts and tools, trading view, another slash DERIV. So you click on it. So after you click on it, inakuleta kwa this platform. It brings you to this platform here. Hii nasema R25 24H. We have some small, so kiangalia hapa we have the search icon, then we have R25. I hope everyone is following, and then we have the plus whatever. This we'll be dealing with it later. This 24H, that is the time frame that you're using. This is basically the type of candles, how you want them to appear. Then we have indicators, zimereboriwa very nicely there. So now what we need to do is, especially ukishaingia kwa hii market yako, you need to understand what you are analyzing. That is the first thing. So assuming tuko volatility 25 index sahi, and we wanted to trade volatility 50 index or volatility 50 1S. So unaingia hapa kwa hii ya imeandikwa R25 on your topmost left. So you delete that R25. So we have forex, inaleta hizi forex pairs whatever, we have stocks, nakuletea commodities hapo. So mostly you guys deal with derived. I'm sure people trade volatility whatevers. People trade all this. They trade even crash, wengine wa trade jump. Anyway, so assuming we wanted to trade volatility 50 1S. So you can either do that or have this symbol. So hii symbol ya volatility 50 1S ni 1HZ50V. So you just click on it, and then the chart of volatility 50 appears. You can confirm that just slightly below, itakuambia sasa hapo. Ideally before ilikuwa volatility 25, sasa imeingia volatility 50 1S plus the symbol itself on top there. The next thing you need to understand, or you want to change here, is the time. The time that you are trading with. In this case, the lowest time we can get is 1 minute. So guys, I would like to take this opportunity to thank the sponsors of this video, Culture Trading Hub, and to inform you that due to public demand, we have decided to create an exclusive course for anyone who is interested in learning professionally binary trading, and it is only a 1-month course. So after discussing and talking with the members who had joined this lesson, we came up with a plan, and in this case, anyone who wants to join the course, for the first 30 members, you're going to be charged only 6,499 shillings. And in this case, we are not going to discriminate anyone. We are not going to be biased. First come, first serve strategy is what applies. So guys, again, let us dive back into the video, and thank you very much to Culture Trading Hub for making this a possibility. So let us dive straight back into the video. So you need to change the time frame. So these are what we are calling candlesticks. They represent prices. They represent prices. So in this case, guys, you need to these are basically candlesticks. When you see a green candlestick, we call it a bullish. We call it a bullish candlestick. A green candlestick is what we call a bullish candlestick. in simple term, you can call it a buying candlestick, which is in this case telling you that the market is rising. You can even see, like, from this area here, this market has been rising all the way to, this is from 217,845 point a lot of decimals. It has bought all the way to, from that zone sahiko 218,000. So it has bought all the way from 217,000 to 218,000. So in this case we can say this market is bull, because, or it is a buying market, because this market has been rising consecutively. In any case you see a market that has green candles zinafuatana hivi, you know that the bulls or the buyers are in control of that market. They have more power compared to the sellers. In that case, you should be considering mostly to be getting in on that market for a buying market or for a rise trade. That's mostly what you should be considering doing in this particular market. Now, anyway, we can't come all the way to here and try to now start analyzing the market before we do some basic analysis on the candlesticks themselves. So the strategy itself is based on these candlesticks. So these are the what I'm calling candlesticks. So these are what we'll be looking at. You don't need to overcomplicate it. You don't need to complicate anything. What you need to understand in this case is that a candlestick is just this, it's a representation of price. A candlestick basically has 4 parts. We have the opening of the candle, we have the closing of the candle, we have the high of the candle, and the low of the candle. So it is represented by the OHLC. In case we zoom in on our screen, right here, you can see we have O, then it's telling us that O is at 218,460.0200. We have H with another number there. We have L and C. So these are the OHLC of basically this last candle that is forming here. We are not bothering, or we are not being bothered by that very much. So what I want us to do is open our candlestick PDF. So if in case you don't have this candlestick charting PDF, you can request for it, although I will send it pale kwa group. So candlestick charting, very nice. So now we need to go back all the way to the top so that we can understand these candles. So the first thing you need to understand is that we have bullish, which are green candles, and bearish, which are red candles. Bullish candles, we have said they are buying candles. Bearish candles, we have said they are selling candles. Now we have 3 parts of the candlestick as shown here. We have the real body of the candle, is the one that is colored in green or red. That is the real body. We have the lower shadow, hiyo ni tail ya chini. That's what we call the lower shadow, or rather you can also call it the lower wick. You can also call it the lower wick, like that. So on the upper end we have another shadow, this one. So we call it either upper shadow or the upper wick. So these are the 4 main parts of a candlestick. Now the other thing we need to look at is where we have the candle opening and the candle closing, and the highest point the candle got to and the lowest point the candle got to. For example, in a buying candlestick, you can see where the open position of that candle is. When we're talking about the open position, hapa ni mahali ambapo hiyo candle ilifungulia. Assuming a candle is you have set your candlestick to be 1 minute. So what happens, and I want us to go to the market right now, see if we can be able to see that, is that those candles will be forming within 1 minute. Zooming in just slightly below hapa chini kabisa, although I will not zoom much, you can see the time. So like right now it is 17:30, 28, 29. The seconds are on the end there, universal time zone. So you are looking at that time, so you need to put into consideration the time. So hii candlestick ilianza ikifika na 30 sharp, hapo ndio candlestick ilianza, so it started forming. So the candlestick is still forming even now. So I want you to follow and see at exactly 31 inaanza another candlestick that is going to run for 1 minute. You see 31 they have started now forming this candlestick. So hapo mahali hiyo candle imeanzia ndipo tunaita the open of that candlestick. So in this case, for example, for this one, that point will be the open point of that candlestick. That is the open point. From there, you can see imekuja ika form shadow side ya chini. If I might get rid of this, it has formed a shadow on the lower end. So far, this is the lowest point that candle got to. So hiyo ndio tuna represent na the low point of that candle so far. So we call it the low point, which is represented by L. Open, it is represented by O. So far this candlestick imepanda hadi wapi? Huku juu. So we are waiting for it to close. You can see it has closed. So now I want us to work with that one that we have seen basically doing all that. So in this case we have the high. So the high is basically the highest point that candle has got to, which is here. So huko kwa week juu kabisa. So that is the high point of that candle that is represented by H. So high, which is represented in this case by H. So the close point ni mahali hiyo candlestick imefungia. So hiyo candlestick imefungia wapi? Imefungia hapa. So in this case, this is our close point for that particular candlestick. So we are going to call it the close of that candle. So this is basically the close. And then close is represented by C. Open is represented by O. So it is open O, like that. So I believe by now I have people understanding what we mean. Like on the contrary, now a red candle will open on the top and then itafungia chini. For a green candle it will open below and close above. So like for this one, you see the buying, since the market opened below, this will be the open, ikafungia juu, this will be the close. So the other one you can see now on the bearish or on the selling candlestick, it opened above alafu ikafungia chini. So the close lazima ikue on the lower end. So I believe and I hope that up to that point we are very much together. Now I want to see if I have people who haven't admitted yet. So let me admit them so that we can. Jane 10 is saying she cannot see. Jane, you need to log out and log back in. Jane, you need to log out and log back in kindly. Log out and then log back in. So guys, you can write your questions down, then I'll answer the questions at the end of this class. So guys, you can write your questions down. I'll take the questions at the end of the class so that we can save time. Remember, we don't have a lot of time. We only have like 25 minutes to go. So far I believe up to that point we have understood. Hata kama hujaelewa yote, I'm sure you have understood something. Now we have looked at the candlesticks. We have seen that we have bullish candlesticks. So we have red candlesticks which are bearish or selling candlesticks. The body size right now, we are not going to deal with it. We are also not going to deal with the range right now. We are not going to deal with the shadow location right now. I want us now to go straight to the strategy itself. Straight to the strategy itself. So basically, the strategy number one that I recommend mostly for beginners to start with is what I call the bullish engulfing. So we can call it the bullish engulfing strategy. Now, what is a bullish engulfing strategy? In this case, we are dealing with a market reversal to the opposite direction. If anything is bullish, it means it is buy. If anything is bullish, that is buying. So anytime we see a bullish engulfing candlestick pattern forming, we are going to buy that market because that market will end up buying. So now I want to draw it in a better manner so that we can get to understand it well. Number one is that, for example, you can see even without going far, like here, it has formed a bullish engulfing. Like this red candle. So I don't know if I can get the arrow to point. So this red candle here and this other candle green one here has formed a bullish engulfing. I want you to see because our focus is on the next candlestick that formed. You see, it was bullish or it was a buying candlestick. So we are going to maximize on the next candlestick that is following after our pattern has formed. So I know by now you know that if I'm looking for a bullish pattern that should be forming in this market, exactly when the last candle of the pattern forms, I should get in on the next candlestick. And now, what is the time frame? My expiration date for my trade, or my expiration time frame for the trade should be 1 minute. The expiration time frame for the trade should be 1 minute. So now, guys, let me go back to my other trading view here. This is my other trading view. I want to draw for you a bullish engulfing. So a bullish engulfing, you will have one candle forming like that. The first candle that forms is a red candlestick. The first candle that forms is a red candlestick like this. Then the second candle that will form will be a green candlestick that is going to completely cover or engulf. So engulfing is basically covering. That is going to completely cover the first candle. You can see right now the red candle is within the green candle. So even if you put it upside down, it will be something like this. It will be something like this. So ni kama the red candle is sleeping inside the green candle. So that is something that you need to understand. This is now what we call a bullish engulfing. We are calling it a bullish engulfing because the outer candle has completely covered the inner candle. In this case, showing us that the buyers in this particular scenario have more power compared to the sellers. Let me tell you one thing for free, guys. It is not as easy as these people in TikTok wanawaonyeshanga. It is not as easy. So you guys will have to learn and understand what basically goes in. Like, why are you making money? It is not automatic. You need to understand why you're making money. You need to have a strategy that is going to help you make that money. Otherwise, you can't just get into the market and expect to make billions of money and you don't know what you're doing in that particular market. So in this case, something you need to note is that we have the open of the green candle below, and it is below the close of the red candle. I'm sure for those of us who have understood the open of these candles and the close, you can relate very well. The other thing is we have the close of the green candle above the open of the red candle, making this a perfect bullish engulfing pattern, which is now going to give us the bullish engulfing strategy. So this is now a complete bullish engulfing. So you can add that this is a complete bullish engulfing. So in that case, if we have a complete bullish engulfing, then it means that we are going to maximize trading the next candlestick that is going to form. So this other candlestick ni yenyewe we are looking forward to trading this other one. The candlestick that now follows our pattern. So you have to wait for the bullish engulfing to fully form, the pattern to fully complete, so that you can get in on the next candlestick. So I hope we are together up to that point. I don't know if I have people trying to join, and then I can try to admit these ones, so that tukue pamoja. Now, as I was explaining, we will be maximizing on this candlestick. Now let me explain to you very well what is happening here. So kitu ya kwanza ni this candlestick ya red ilitumia 1 minute kuform. Then this other green candlestick also took 1 minute to form. So hizo ni dakika mbili so far. The third minute on the third candlestick after the bullish engulfing has formed. So this 1 minute here on the third candlestick is the one we are trading on. So at exactly, assuming kama saini 2042 na iko na 19 seconds sai. So assuming hii candlestick itafungia hapo at 2043, we are assuming that this candlestick closes at 2043 at this particular point. Then we will trade from 2043.01 to 2043.59. So with your 1 minute is the one we are trading, and we are going to say that this market is going to rise. So if at all the market closes, or the candlestick will close above where we entered that market at then it means we are in profit. Now if you are in profit on a rise market, you are going to make like 92% of your initial investment. So assuming you are risking $2, you're going to make 3.8 USD. So it is better than trading an under 9 market with a bot, an under 8 market with a bot, an over 1 market, an over 0 market, an over 2 market, even I think over 3 and under 7. The return is good. The return is 90 what percent. Let me try to go back to DERIV and see. So the return on so you have to basically, guys, don't worry, I decided to withdraw all my money from DERIV juu leo ameninyorosha and put it to my pocket option account, and Mungu ni mzuri, I've recovered. I've managed to make like 1,000 today, so it's not quite bad. Now we are trying to trade in this case we are trying to trade what we call rise and fall. So rise and fall, then ukishaingia, so utaingia DERIV trader. Kuingia DERIV trader ni rahisi. So utaingia DERIV trader, the only thing you need to change is now hapa kwa time. You see it is 1 tick. So you're going to change from ticks to minutes. So the best thing about this lesson is that I'm recording it and it will be uploaded on my YouTube. In case kuna mahali umemiss, you just go there and then you just find the lesson. And you can be able to follow it. Ukipause, kama una pause, unaweka settings like that, so that it can be even more easier for you. No, you need to change this to minutes. So the lowest minutes that DERIV can give us is 1 minute. So it's not like pocket whereby I'm able to trade even with 5 seconds na ni candlestick. So in this case we are at a disadvantage in that particular scenario. But assuming we are doing this, then you can set your time frame to 1 minute. So if you are setting your time frame to 1 minute, then this is where you set your stake. So you can set, assuming you have like 10 USD, you can set like 2 USD, depending on your risk tolerance. Depending on your risk tolerance. If you want to risk all of it 10 USD in one run, then you're going to make a payout of 19 because you are getting a return of 95. Now, if you are looking at a market like over under, for example, if you're trading over 2, the risk or the reward is 40. If you're trading over 3, the reward is 63%. If you're trading over 4, sahi ndio unafika kwa level ya rise and fall. So ukishaivia rise and fall, you will have better chances of surviving in these markets because you'll be getting better returns on your investments. So you can imagine risking like 10 USD in this case to make 2 USD. Like chances zako za kublow your account are higher because in any case you make a loss of 10, then you're going to take like 5 runs or 5 trades to recover from that loss. But assuming you're trading something like rise and fall, you only need one trade to recover. So it is easier and better for you to trade rise and fall if you are able to do it. Trade it manually and you're going to see the difference. So the other thing we have changed on the minutes. So minutes so far zinafaa zikuwe in sync with the ones you have set at your trading view implementation. So kama hapa minutes zako zinasoma 1 minute, kwa deriv trader yako zinafaa zisome 1 minute. So they should be in sync. Assuming here you are trading volatility 51 second index, kwa deriv trader yako inafaa ikue volatility 51 second index. Then the other thing you're going to change, you can see this point here on your left, just below the volatility, you can see what we have, something like that looks like a bar chart. It's written 1T. So in this case, it is the chart types. So you click on it, then you're going to select 1 minute, then it will allow you to select the candlesticks. From there, you can be able to see the candlesticks. Now you need to confirm that if venye hizi candlesticks zinaapia ndivyo zinaapia kwa trading view implementation. So you can switch, look at your trading view implementation, and you can see that it is true. The candlesticks that are forming here are forming exactly the same like the candlesticks that are forming on the other end at your deriv trader. So now what we are expecting is now a bullish engulfing to form, but kitu unafaa ujue ni bullish engulfing inafaa iform market ikirise. So it shouldn't be forming when the market is like mahali kama hapa and then it is probably going down. It might be a fake signal. Since we are trading rise, then our market should be rising. In this case, I think I'm going to dedicate another lesson whereby I'm going to show you how to identify support zones. A support zone is where you're supposed to be buying the market at. For example, I can say that this is a support zone because venye hii market ilifika hapa, hii market ilianza kununua. So ni kama inashikiliwa ikifika hapo. So this market is now buying. On the other end, we have what we call a supply or a resistance zone. So assuming like here venye market ilifika hapa, so hii market ilikuja kufika hapa, it started falling. So you can say that this is a resistance zone because whenever the market gets to that point, it starts falling. So in that case, you can say that is a resistance zone. I think we are going to dedicate a lesson on that, resistance and supply. Resistance is also supply. We mostly use supply zone, and support is basically a demand zone. So in this case, a support zone, people are looking forward to buying the market. Resistance zone, people are looking forward to selling the market. So now, for example, looking at this market, you can see like in this case we were in a support zone because hii market ilifika hapo. So ukiangalia pia nyuma ni kama kuna mahali pengine hiyo zone ilikuwa imeshikilia, so like around this area here. So this is basically what happened. The market came back here, and then what it has formed here is a bullish engulfing. So it has formed a bullish engulfing here. So you are supposed to get in on the next candlestick. So you say buy. Hii candlestick ikishafunga, you say buy. Then after 1 minute, hiyo candlestick ikifungia juu, you are on profits. And the candlestick closed above. You can see even we closed like 10 candlesticks above this bullish engulfing. So this was a good signal for you to enter. So assuming even if you are risking like $5 and you have a perfect entry, you are sure that that market is going to make money for you. But in trading, you are never 100% sure. So it is good to apply. And I always say it is good to apply proper risk management. So assuming sasa uko kwa derivative trader yako hapo, so kama naweza itoa nijaribu kufanya this thing. Where is the other one now? So I wanted to see both of them. I don't know where the other one is. So here it is. So like both of them are here. You can see both of them are climbing. So this one I'm not able to do a lot of analysis, but the other one I'm able to do analysis. I can draw lines, I can draw Fibonacci retracements, I can draw circles, rectangles, everything, arrows and all that. So this one is a better platform overall for the trading view implementation, is better for analyzing. Then ukishapata signal hapa, then you are executing on the other part. So in this case, this market is buying so far. I think in the next lesson now we'll have to see the bearish engulfing, which basically is the opposite of the bullish. So hii unaipata juu ya market. So hiyo market inafaa kuwa iki sell in that particular scenario. But too bad, time is running out fast. So I don't know. I want to give you a simple task. I want you to go to your market and try to identify these bullish engulfing candlesticks. Even if you are not going to trade, or if you are going to trade on a demo account first. If a bullish engulfing candlestick forms as I shown you how basically it forms, venye niliwaonyesha ina form hapa, if it forms like this, then you look at the next candlestick. Alafu lazima ikue mahali kwa support. Like hii market ndio imekuja inaanza venye unaweza jua support zone, unaweza weka, you can just put a line, jaribu kupush market yako nyuma, see whether market ilianza kununulia hapo. I know you guys are learned people, so you are able to do some of this stuff, but I'm going to dedicate a complete lesson on that. So like here I have a bearish engulfing forming. Now I don't know, I'm trying to look at the time so you can see. So if for example I said fall, I'm expecting that probably this candlestick would close below or would close down ideally. Although I'm late, you're supposed to execute at the close of the other candle, at the close of this other candle, so that kuna zile zinaformingi very small candlesticks. So you might end up making a loss simply because you didn't time that candlestick correctly. So the timing inafaa ikue on point. Immediately the other candles closes, you get in. Because right now we are risking, because this market might close below, but ifungie close to our entry, make a loss simply because you have been late on your entry. Make sure your entries are on point in this particular scenario, so that you can avoid losses. You can see that candlestick. So you see, we will make losses not because we didn't predict correctly, because we opened that trade late. Otherwise kama tulikuwa tumefungulia at the open of that candlestick, we would have ended up making a profit on that particular trade. Now I think I'm through with that. So right now your task is simple. We might be having another lesson on Friday, Friday 7 p.m. So allow me to have a date with you on Friday 7 p.m. because right now 9 p.m. I have a forex class that should be running. So I'm going to go back to the platform here. So I want to open the mics for people so that I can receive a question.